This is a technical analysis and news of the AMC Entertainment stock. AMC Entertainment stock has reached new one-year lows. In Friday's trading session, NYSE AMC fell 8.3%. AMC Entertainment fell for the third day in a row on Friday, despite an exciting new partnership with a streaming juggernaut. The shares of AMC fell another 8.3% on Friday, ending at $6.53. Following a two-day surge to start the month, all three major averages declined for the third consecutive day. Market expectations were subdued by better-than-expected September employment statistics, as worries of more Fed rate hikes arose. Overall, the Dow Jones down 2.1%, the S&P 500 fell 2.8%, and the Nasdaq fell 3.8% for the day. AMC stock price. The stock was unaffected by AMC's recent contract with Netflix to play its upcoming feature Glass Onion, a Knives Out mystery in theaters. However, the relationship is not exclusive, since the film will be exhibited in a number of theater chains throughout the world before being released on the Netflix streaming platform. To overcome September's box office issues, AMC will need more assistance from upcoming films like as Black Adam and Black Panther: Wakanda Forever. On Friday, both AMC and APE preferred units hit fresh 52-week lows, unable to escape the market sell-off. APE units fell below $2 for the first time, continuing an almost straight-line decline that started in August. GameStop and Bed Bath & Beyond fell 2.5% and 7.7%, respectively, throughout the session. AMC Entertainment Holdings shares were down 9.1% at 11:06 a.m. on Wednesday after bankrupt gold and silver miner Hycroft Mining reported getting a delisting notice from the Nasdaq stock market. AMC surprised investors earlier this year when it paid $28 million in cash for a 22% stake in Hycroft. Eric Sprott, a metals investor, invested a similar amount in Hycroft in exchange for the same percentage ownership position. Investing in a mining business that hadn't been operating in a long time and hadn't yet done the necessary investigations to see whether its unique mining strategy would be profitable was viewed as diversionary at best. Despite the fact that the theatrical company was only giving a little amount, many outside observers thought the money would be better spent on its own activities. AMC is continuously fighting to get moviegoers back to the theater. According to industry website The Numbers, ticket sales in 2022 have reached an annualized rate of over 848 million, which is more than double the sum of last year but still 30% lower than the 1.2 billion tickets sold in 2019. Hycroft stock is presently selling at less than 70 cents per share, and it has closed below $1 per share every day since August 15th. The Nasdaq has given the miner 180 days to get its shares back over $1 for 10 days in a row. Many companies in similar situations, whose stock does not recover to that level, may occasionally use a reverse stock split to artificially inflate the price. While this may assist raise shares up for the needed time period, they often fall back down thereafter. AMC stock is down 10% despite a major Netflix transaction. Short sellers seem to be winning the battle for AMC stock. What a day for AMC Entertainment shareholders. It makes little difference whether investors are self-proclaimed apes or are investing in this movie theater firm based on its perceived value. Today, the market is hammering AMC shares once again. AMC stock has plummeted nearly 10% in today's session as of Thursday afternoon. Notably, this move comes on the heels of a huge announcement from the movie theater company. Yesterday, AMC announced a historic partnership between the film studio and streaming juggernaut Netflix. This agreement will enable fans to see the upcoming Netflix original film Glass Onion, a Knives Out mystery in theaters. Surprisingly, many people may have expected this incredible show of collaboration between traditional and contemporary entertainment businesses to be a good thing. After all, Netflix has long been seen as a serious competitor to AMC and its peers. People want to be entertained at a reduced cost, without having to travel or pay for expensive beverages. After that, let's take a look at why investors seem to be losing trust in AMC stock as a consequence of this news. Some of the current concern about AMC may be connected to the amount paid for the movie rights. According to estimates, AMC would pay $450 million for the exclusive right to play one picture in its theaters. Overall, it seems that this rights agreement may benefit Netflix more than AMC, since consumers will be able to watch the film on the streaming service later. Meanwhile, in terms of marketing, Netflix will benefit the most from this film's launch. It is unknown how well this sequel will do in cinemas. The original film only grossed $311 million worldwide, yet AMC has already paid more for the sequel's rights. As a consequence, the traditional premise of theater chains paying huge fees to content suppliers to show films may be at the core of the present AMC stock problem. Content reigns supreme, and Netflix is banking on its ability to develop popular content. The question for AMC is whether foot traffic will reach new highs or continue to drop. Fundamentally, AMC stock seems to be expensive at the moment. This is a business that is still in debt. And, although CEO Adam Aron has done some intriguing things in the public markets to generate capital during times of boom, it may be too little, too late. The sequel to Knives Out will be released in theaters next month. But Netflix will benefit more than AMC. You can clearly teach an old media company new tricks. Glass Onion, a Knives Out mystery, a sequel to 2019's surprise hit Knives Out, will be released in theaters a month before its Netflix debut. That's a catchy title, similar to Man Bites Dog. But it's not all that shocking. With Netflix's membership growth stalling, diversifying one's income makes sense. What does this mean for AMC Entertainment Holdings and the whole film industry? It's unlikely to make an impact for the time being. Fortunately for AMC and its ticket-selling rivals, the needle will not have to be moved. Spoons have been removed. AMC CEO Adam Aron is a colorful figure to follow on social media. As the CEO of one of the most renowned meme stocks, he has cult status, but he sometimes goes too far. Take a look at his tweet on Netflix's news. This may seem to suggest that AMC has signed into an exclusive distribution arrangement with Netflix at first glance. It was ineffective. Glass Onion will be distributed in all 3 main theater chains in the nation. The film will also be shown at Cinemark and Regal, whose parent firm filed for Chapter 11 bankruptcy reorganization last month. These businesses will distribute the picture to 600 theaters in the United States. It will also be aired in a few other countries. The deal is a great achievement. According to a May Bloomberg article, the stumbling block was that theater chains requested 30, 45, or 60 days of exclusivity. They didn't want to promote a film that Netflix subscribers could see for free at the same time it was in theaters. Netflix agreed, but only for the shortest possible time of exclusivity. The film will be released in theaters on November 23rd and on Netflix on December 23rd. This will not be a goldmine for theater chains. The film will only be in theaters for 1 week. Some of your Thanksgiving leftovers will last longer than the film's run in theaters. Keep in mind that, although Knives Out was a surprise success in 2019, with $115.7 million in domestic ticket sales, there were still 20 films that fared better that year. Glass Onion may be lucky to have reached $10 million in ticket sales after just 7 days of performance, and with everyone knowing that they'll be able to see it only a few weeks later. This is fantastic news for Netflix since it will not only get a new revenue stream, but will also receive aid in generating interest in an upcoming release on its service. The good news for AMC and its rivals is that Glass Onion will not be a big draw. The preceding 2 months at the box office were awful, but by late November, there will be 2 possible blockbusters in theaters. Even weeks after its initial releases, Black Adam and Black Panther: Wakanda Forever are expected to attract significant audiences during the Thanksgiving holiday weekend. Glass Onion will be released on November 23rd, along with Disney's Strange World and Timothée Chalamet's Bones and All. As a consequence, cinema theaters will not depend on this Netflix picture to save their holiday season. Let's see Netflix bail out the exhibitors in the midst of a serious theatrical recession. Domestic multiplex ticket sales fell 32% in the third quarter of 2019 compared to the same time in the previous year. 1998 may have a worse pre-pandemic showing. The next several weeks might be slow, since the franchise film that would have been the top draw next weekend is also available for free on a premium streaming service. Later this month, the prospects of a blockbuster hit will rise, but comparisons to pre-pandemic crowds will be tough. Business at the multiplex might revive after a terrible 2 months, but not immediately. The third quarter did not end as it started for multiplex operators. AMC Entertainment Holdings and its struggling peers need a strong fourth quarter to turn things around. The fourth quarter will not be easy, but it has the ability to transform the game. It seems like a lifetime ago when July began with a bang. The first 2 weeks of the third quarter in the United States had the highest level of box office income since 2016. Domestic ticket sales were 32% lower in the third quarter of 2019 at the end of September than in the prior pre-pandemic year. You had to go back 24 years to find the preceding pre-pandemic year with a Q3 as soft as the one we just concluded over the weekend. Oh, and we haven't even considered inflation. It's not just the third quarter. Box office revenues are down 34% year to year when compared to 2018. Multiplex operators anticipate a good conclusion to 2022, while subplots and challenges continue to build up. The top 10 films have failed to make more than $60 million in domestic ticket sales for 6 weeks in a row. Only one weekend in 2019 saw movie office receipts fall short of $60 million. Although it may take some time, the fourth quarter should be better. The industry's blazing start to the third quarter will almost certainly be followed by a couple of slow weeks before heating up again. Crowds will rush to see Black Adam in late October, Black Panther: Wakanda Forever in mid-November, and Avatar: The Way of Water 5 weeks later, but everything else must establish itself first. Why should you abandon your plans for the next several weeks? Smile has officially gotten off to a good start. Although the well-reviewed horror picture only made $22 million in ticket sales over the weekend, it was the biggest launch in more than 2 months. The problem is that comparisons to 2019 will be disastrous. Remember that one of the year's biggest movies, Joker, will hit theaters in October 2019. Later that month, The Addams Family and Maleficent, Mistress of Evil would be released, with both grossing more over $100 million in the United States. The star-studded Amsterdam opens this weekend. But except from Knives Out, the genre has always had low theatrical appeal. The major name for the next week is Halloween Ends, which will also be available on Peacock Premium at the same time. Peacock just dedicated the whole month of September to providing clients with a year of premium service for $1.99 each month. It restored to the usual monthly $4.99 rate over the weekend. But it still leaves a lot of families with free access to the latest film in the Halloween franchise. A short sale is a bet on the future appreciation of an asset. Shorting a stock has a high risk of both rewards and losses. A short squeeze may occur when the price of a shorted stock increases, leading the price to rise even more. High short interest does not guarantee a short squeeze, but it may predict one under certain circumstances. The following is a list of the most extensively shorted stocks. Because of the rise in meme stock trading during the outbreak, some retail investors now make it a point to identify which firms are being shorted the most. By purchasing a stake in one of these stocks, they seek to squeeze the short seller and cause a massive run for the stock. It's a high-risk move, but if done well, it may result in 100% or more gains in a short period of time. If you're interested, here's a list of the most shorted stocks for October 2022. What does it mean to short sell a stock? When you sell a stock short, you are betting that the price will decline. You borrow shares of stock from someone else, sell them, and then hope to purchase them at a lower price so that you may return the shares to the person who borrowed them. You retain the difference while they get their parts returned. Shorting is risky since there is no limit to how high the stock price might increase, and if it rises rather than decreases, you can lose a lot of money. Consider the well-known example of a short stock, AMC Theaters. Before it became popular with the meme set, this stock was trading for about $5 per share. Hedge fund managers believed the stock was expensive for a variety of reasons. This was due to a number of factors, including less people going to the movies during the epidemic, new movies being released on streaming services on the same day they were released in theaters, and a more enjoyable movie watching experience at home. As a result, these hedge fund managers had to borrow shares from other investors. If the stock price dropped to $3, they would return the loan funds to the owner, pay the owner a little amount of interest, and gain the difference, in this case $2 per share. When Redditors from Wall Street Bets and other retail investors decided to start buying AMC shares, this trading strategy backfired on many hedge funds. Because the stock price was rising rather than falling, hedge funds were compelled to borrow shares for an extended length of time and pay interest throughout that time. When the stock price climbed, a short squeeze ensued. What is a short squeeze exactly? When the stock price skyrockets, the short seller is obliged to buy back shares at a higher price. Because stock prices may climb infinitely higher and sellers must acquire them at market price to pay back the shares of stock they don't own, there is no upper limit to the loss a short seller might incur. Let us return to the AMC example to show this. Assume the short seller borrows AMC shares for $5 per share, and the stock rises to $25 per share. They must now either wait and hope that the stock price declines quickly, or buy shares at this price to prevent future losses. Assuming they pay $25 for the shares, they return them for $5, resulting in a $20 loss per share. When compounded by the amount of shares shorted, the loss becomes significant. If the short seller does not purchase shares to cover their losses, they may be subject to a margin call, which forces them to purchase shares or deposit cash into their account to cover their losses. How to spot short squeeze stocks. There are several strategies for spotting stocks that are experiencing or will shortly experience a short squeeze. The first strategy is to look for firms with a high short interest as a percentage of float. This indicates that a significant number of shares have been sold short in relation to the total number of shares available for sale. Another method is to examine stock short interest. This data is accessible wherever stock quotes are acquired. If you use Yahoo Finance, for example, go to the home page and click on Screeners, then scroll down to discover a link to the most shorted stocks. Furthermore, if you are looking at a certain stock, you may get the short ratio by clicking on the Statistics tab. For an ideal short squeeze stock candidate, the number of shares short should be more than 5 times the average daily trading volume. Furthermore, short shares must account for at least 10% of the entire float. Finally, rather being decreasing, the number of shares shorted should be increasing. Rather than scanning the markets for these opportunities, many investors are relying on artificial intelligence to do the tough labor. AI, in fact, offers a short squeeze investment kit, because artificial intelligence scours the markets in real time, bringing in all types of investment data. This is a very low-risk strategy for participating in a large number of short squeezes at once. AMC CEO Adam Aron says some absurd things, but his decision to buy 22% of a random Nevada gold mining company amid the COVID pandemic is one he may come to regret. On Monday, the Nasdaq issued a formal warning to Hycroft Mining Holding Corp. for failing to satisfy the stock exchange's minimum bid price of $1. Since August 12, Hycroft Mining shares have not closed over $1. The Nasdaq provides a listed company a 30-day grace period before issuing such a warning. Hycroft now has 180 calendar days, or until April 3, 2023, to comply. The stock must be valued at $1 for 10 consecutive business days during that period. If it fails, a second compliance period may be enforced, which would necessitate a reverse stock split to meet the minimum bid price. There can be no confidence that the company will be able to re-establish compliance with the bid price criterion, even if it maintains compliance with the other listing conditions, Hycroft said in an SEC filing. At this time, no decisions on a response to the bid price notice have been made. Representatives for Hycroft and AMC Entertainment did not respond to IndieWire's request for comment on this story right away. HYMC shares closed at 66 cents apiece on Wednesday, giving the company a market valuation of $132.6 million. The 52-week low for HYMC is 28 cents per share, so this isn't really a low point for the firm. The mining company's worth was much greater in its first 2 years of public trading than in the succeeding two. In August 2020, HYMC traded for more than $15 per share. AMC Theaters paid $27.9 million in cash for a 22% share in Hycroft, which controls the 71,000-acre Hycroft mine in northern Nevada, on March 15, 2022. According to estimates, the mine has 15 million ounces of gold and 600 million ounces of silver. The investment from the meme stock favorite was a boost for HYMC at the time, driving shares from $1.39 to $2.59 2 weeks later. Our strategic investment announced today is the result of our having discovered a business in an unrelated industry that seems to be precisely like AMC of a year ago, AMC chairman and CEO Aron said at the time of his Hycroft acquisition. It, too, has rock-solid assets, but it is facing a major and immediate liquidity crisis for a variety of reasons. As a result, the company's stock price has collapsed. We are certain that our involvement will significantly aid it in addressing its challenges, to both its and our benefit. To state the obvious, Aron stated at the time, one would not typically imagine that a movie theater company's major specialty includes gold or silver mining. Some of us remain skeptical. Aron had a lot to say in that press release, which you may read in its entirety if you have the time. Adam, on the other hand, should get a shovel and begin digging. AMC is the largest movie exhibition company in the United States, the largest in Europe, and the largest in the world, with over 950 theaters and 10,500 screens worldwide. Stock market day trading technical analysis tutorial for beginners, also available in Hindi and Bangla languages via captions. This can be used for live trading for gold analysis, oil technical analysis, and stocks analysis. This knowledge is especially important for day trading live. Power of stock trading could be unleashed if you paper trade and apply the knowledge shared in this course. You could find using screeners and technical analysis best stocks to buy now, and including additional metrics gain knowledge about best dividend stocks to buy now. Please come back to this channel to understand what are the best stocks to buy now. This is Crypto Block IQ. Subscribe to this channel to get the latest price analysis and trading systems signals. We focus on LUNC News Today, Terra Luna Classic News Today, Luna Classic Price Prediction. Also, we present analysis on Bitcoin and Bitcoin News Today. We cover tickers XRP, BTC, Cardano, ETH technical analysis, and BNB Hive. We also going to add explanations on topics such as how to stake Luna Classic and BNB Miner works. Our videos cover BTC technical analysis, Luna Classic price prediction, Binance USC analysis, and more. Metin 2F. In the next weeks, we will add VeChain live news in our videos and Ethereum mainnet details. Write down below in the comments what is your strategy for the next few days. Click the card on the right to get to more Bitcoin price prediction analysis.